Something major just unfolded in the long-running battle between the SEC and Ripple, and it's sending shockwaves through the crypto world. For years, the SEC has been firm, almost stubborn, in its stance against Ripple, arguing that XRP should be treated as a security. That position has shaped not only the court case but also how investors, exchanges, and even other crypto projects view regulation in the US. But now, after all this time, the SEC seems to be flipping its approach, and that's not a small deal. This isn't just about Ripple winning or losing a lawsuit. This shift could completely reshape how regulators classify digital assets, how companies launch their tokens, and ultimately, how safe or risky XRP might be for investors. For XRP holders, this could mean clarity and confidence after years of uncertainty. For Ripple, it could open the door to expansion without the constant shadow of litigation. And for the broader crypto market, it could mark the start of a new chapter where regulators and blockchain innovators finally find common ground. If you've been tracking this case, you already know just how pivotal it is. But if you haven't, don't worry, we're going to break it all down step by step. Because what's happening right now might be one of the most important shifts in crypto regulation we've ever seen. Before we dive in, do yourself a favor. Hit like, subscribe, and turn on notifications so you don't miss any breaking updates. Drop a comment with XRP if you're watching this in real time, and share this with someone who needs the signal. Today's insights could be the edge they've been waiting for. For those who may not be fully up to speed, let's rewind a little. Ripple Labs, the company behind the digital asset XRP, has been locked in a legal battle with the U.S. Securities and Exchange Commission, SEC, since December 2020. The SEC alleged that Ripple conducted an unregistered securities offering by selling XRP, essentially arguing that XRP is not a currency or commodity, but a security like stocks or bonds. This was huge because if the SEC's argument held, it wouldn't just affect Ripple. It could set a precedent that impacts countless other crypto projects. Suddenly, the entire industry was watching the case closely, knowing that the outcome could define the future of digital asset regulation in the US. Ripple, on the other hand, pushed back hard. They argued that XRP has been functioning as a digital currency for years, powering real-world payments and remittances across borders. It's not a stock or a share in Ripple, it's a utility token with use cases independent of the company. Ripple also pointed out that the SEC had allowed XRP to trade for years without raising issues, which made the lawsuit feel like a sudden and inconsistent move. Over time, the battle grew more intense. Investors were caught in the middle, with exchanges delisting XRP to avoid regulatory risk, while global adoption of Ripple's payment technology continued outside the US. Each court filing, each ruling, and each public statement from Ripple or the SEC shifted market sentiment and fueled debates in the crypto space. This case became more than just Ripple versus the SEC. It evolved into a test case for how US regulators would treat cryptocurrencies in general. Would tokens be considered securities? Would innovation be stifled by outdated rules? Or could this case force regulators to modernize their approach and finally bring clarity to the crypto industry? What just happened? The SEC's flip. Recently, something almost unthinkable happened. The SEC, after years of sticking to one rigid narrative, has started showing signs of walking back its stance on XRP. For years, the agency's official position was that every sale of XRP, whether by Ripple or by an ordinary trader on an exchange, was essentially an unregistered securities transaction. That argument has been the backbone of their entire case against Ripple. But in their most recent filings and courtroom statements, the SEC has shifted tone in a way that has left the crypto community buzzing. The regulator has started drawing a distinction between two very different categories of XRP transactions. Ripple's direct sales to institutions, these are the deals Ripple made with hedge funds, venture firms, and other large investors. The SEC is still holding firm that these sales looked and behaved like securities offerings. Secondary market transactions. These are the everyday trades that happen when you or I buy XRP on an exchange like Binance or Coinbase. Here, the SEC is now signaling that maybe, just maybe, these transactions shouldn't automatically fall under securities laws. This is massive. Why? Because for years the SEC blurred that line completely. They acted as if Ripple's actions and the secondary market were one and the same. To the agency, every XRP purchase was treated as if you were investing directly into Ripple's business. That all-in-one basket view gave them a lot of power in pushing their lawsuit. Now, though, the SEC has essentially admitted that not all XRP transactions are equal. And by doing so, they've undercut one of the central pillars of their own case. Think about the implications. If the SEC is now acknowledging that your XRP trade on an exchange isn't the same as Ripple cutting a deal with an institutional buyer, then everyday holders may no longer be seen as participating in a securities transaction. In plain English, it could mean that when you buy XRP on a secondary market, you're not breaking securities laws, and neither is the exchange that lists it. This may sound like legal technical jargon, but it's actually a complete shift in tone. Remember, the SEC's original hardline position was uncompromising. XRP is a security, full stop, no exceptions. Now, they're quietly carving out an exception, and that opens the door to a whole new legal and regulatory landscape. And here's the kicker. By separating Ripple's direct institutional sales from secondary market trading, the SEC has, in a roundabout way, validated what Ripple, its lawyers, and countless XRP holders have been arguing since day one. Buying XRP on an exchange is not the same as buying Ripple stock. This flip may not look like a full concession yet, but in the world of law, these small acknowledgments carry huge weight. Judges notice them, lawyers leverage them, and markets react to them. For XRP holders, it's a signal that the tide could be turning. Why this flip matters? This flip could have massive consequences. First, for Ripple itself, it strengthens their case significantly. It means Ripple can argue that the SEC's original lawsuit was overreaching and that ordinary XRP holders shouldn't have been dragged into a securities battle in the first place. Second, for XRP holders, this is potentially a game changer. A softened SEC stance could pave the way for exchanges to relist XRP in the US, opening the floodgates for new liquidity and institutional adoption. We've already seen hints of this in the market, with XRP showing resilience compared to other altcoins. And third, this has broader implications. If the SEC acknowledges that not all token transactions are securities, this could impact other major projects too. Think Ethereum, Solana, Cardano, basically any crypto that isn't Bitcoin. The precedent could ripple, no pun intended, across the entire industry. Broader implications beyond XRP. The SEC's shift in tone isn't just about Ripple and XRP, it represents something much larger: the direction of crypto regulation in the United States. For years, the SEC has taken what many in the industry call a regulation by enforcement approach. Instead of issuing clear, forward-looking rules for digital assets, the agency relied on lawsuits, settlements, and enforcement actions to draw the boundaries. This created a cloud of uncertainty over the entire industry. Companies didn't know if their tokens would be targeted next. Investors couldn't be sure whether their holdings were in regulatory crosshairs, and innovators often chose to relocate to friendlier jurisdictions overseas, draining talent and capital from the US. Now, however, the SEC's willingness to differentiate between Ripple's institutional sales and the secondary market trading of XRP could mark the beginning of a regulatory recalibration. It suggests the SEC is acknowledging something the crypto community has been arguing for years. Not all transactions involving a token are the same. The context matters. The purchaser matters. The purpose of the sale matters. By softening their stance, the SEC may be signaling that it's finally open to a more nuanced framework instead of painting everything with the same broad brush. Why now? There are several possible explanations. Mounting political pressure from Congress, where bipartisan voices are demanding clarity and legislation for digital assets, cannot be ignored. Lawmakers have grown increasingly frustrated with the SEC's refusal to provide workable guidelines. Recent court rulings, too, have dealt blows to the SEC's sweeping interpretations, forcing the agency to walk back its positions in some cases. And perhaps most importantly, the reality has become undeniable. Crypto is not going away. The US can either embrace it with thoughtful regulation or risk being left behind as Europe, Asia, and other regions establish themselves as global hubs for blockchain innovation. the implications for the broader market are enormous. If XRP achieves clarity, it won't just benefit Ripple. It could set a legal precedent and provide a blueprint for how regulators approach other altcoins. Wall Street, institutional investors, and global financial institutions are watching closely. If secondary trading of XRP is not considered a securities transaction, then what does that mean for Ethereum? For Solana? For Cardano? These networks already trade with the characteristics of commodities in practice, but a shift in the SEC's approach could bring that reality closer to legal recognition. Think of it this way. If XRP, the token that has been at the center of the SEC's most high-profile crypto battle, is deemed not to be a security in secondary markets, it would be increasingly difficult for the SEC to argue that other tokens with similar market structures are securities. That would reshape the regulatory landscape, opening the door to clearer frameworks and potentially even commodity-style regulation for many digital assets. And the ripple effects don't stop there. Clarity could attract fresh capital back into U.S. markets. Startups that left for friendlier jurisdictions may reconsider building in the States. Institutional investors, pension funds, hedge funds, and asset managers that have been sitting on the sidelines due to regulatory ambiguity could finally enter the space with confidence. In other words, what happens with XRP doesn't just impact Ripple's fortunes. It may unlock the next wave of growth for the entire crypto sector. This isn't just about one coin. It's about setting the rules of the game for the future of finance. What XRP holders should watch. So, what should XRP holders do now? The landscape is shifting rapidly, and while excitement is high, this is still a game of patience, vigilance, and timing. 1. Watch the courts. The courtroom remains the ultimate battleground. While the SEC has softened its stance, the judges' rulings will carry the final weight. A decisive ruling in Ripple's favor could establish a legal precedent, not only validating XRP but also reshaping the way regulators handle digital assets across the board. On the flip side, unfavorable rulings could trigger short-term corrections or even reignite enforcement uncertainty. For XRP holders, staying updated on these legal milestones is critical because the markets tend to react within minutes of new rulings. 2. Watch the exchanges. Relisting is the elephant in the room. When U.S. exchanges like Coinbase, Kraken, or Gemini pulled XRP in the wake of the SEC lawsuit, billions in liquidity evaporated almost overnight. If these platforms decide to relist XRP, it would represent a massive vote of confidence, not only signaling regulatory clarity but also unlocking access for millions of retail and institutional investors. A relisting event could be a catalyst moment, sparking significant price movements and renewed mainstream attention. 3. Watch Ripple's business moves beyond the courtroom. Ripple has been quietly but aggressively expanding its global footprint. From partnerships with central banks exploring CBDCs to integrations with major financial institutions for cross-border settlements, Ripple's business strategy continues to position XRP as more than just a speculative asset. It's a utility token with real-world use cases. If U.S. clarity arrives, Ripple could finally scale these initiatives domestically, amplifying adoption and demand for XRP. This isn't just about token price. It's about XRP becoming embedded into the future financial plumbing of global payments. 4. Watch the market reaction. History shows XRP often moves ahead of the broader market when regulatory news hits. That means clarity around XRP doesn't just benefit XRP holders. It could send a signal across the entire crypto market. A favorable outcome might unleash a domino effect, sparking rallies in other altcoins as investors bet on more rational, utility-based regulation. Wall Street, institutional players, and hedge funds are watching carefully. Once they perceive reduced risk, the capital inflows could be staggering. The bottom line, XRP holders are standing at the crossroads of history. The next few months could decide not only the fate of one digital asset, but also the direction of U.S. crypto regulation as a whole. Whether you're a long-term believer in Ripple's vision or a short-term trader chasing volatility, keeping a close eye on the courts, exchanges, Ripple's expansion, and market sentiment will be the keys to navigating what could be one of the most pivotal moments in crypto's evolution. And that wraps up our deep dive into the SEC's shocking flip on XRP. But remember, this isn't just about one token. This is about setting the stage for how regulators will treat the entire crypto industry moving forward. What happens with XRP could create the framework for Bitcoin, Ethereum, and every other project in this space. We're talking about investor confidence, innovation, and whether or not the US is going to lead or fall behind in the global digital asset race. So here's the bottom line. If you're holding XRP or even just watching from the sidelines, you need to stay ahead of these updates. Knowledge is power in this space, and being informed could be the difference between catching the next major breakout or missing it completely. If you found this breakdown helpful, do me a favor, smash that like button, subscribe, and turn on the notification bell so you never miss an update. I'll be bringing you the latest news, analysis, and strategies as this story unfolds. Drop a comment below and let me know. Do you think this is the beginning of XRP's big comeback? Or is the SEC just playing games with the market? I want to hear your thoughts. Thanks for watching, stay sharp, stay informed, and I'll catch you in the next update.